Hello guys, my name is Andrew Aziz, author of How to Day Trade for a Living. This webinar is one of the webinars that weekly we introduce to our members at bearbultraders.com and Peak Capital Trading. If you enjoyed this video, feel free to check out our community for free. Every week we publish videos on technology, strategy, and psychology for your trading performance. So feel free to join us. The link is below. And if you have any question, just leave in the comments. Thank you.
Okay, so this is the magic of compounding, tools for account growth. Like I've mentioned, this is one that I like to end with. It's not a technical basis class. I feel like I've probably bombarded your brains completely to where they are goo by now with the market analysis classes. That we're just going to let that sink in, and we're going to go to something that's kind of fun. We get to talk about kind of growing our account and just some tools to do that. If you do have questions though, since this is our last class, this is usually a pretty quick one. So there should be some time at the end. If you guys have any questions on anything we've discussed previously that you want to kind of dive into a little bit more. And like I said at the beginning of this, if we have time, we'll discuss the technicals on Mara today and go through kind of what's happening over there. So let's have a party here. Okay, so disclaimer, last time you'll see this from me. And here's what we're going to dive into. So we're going to talk about compounding. That's probably a term that most of you have heard of, but we're going to talk about how to do it and how to do it correctly without really like freaking your psychology out. So some strategies to maximize it, some risk management and proper sizing. And then we're going to go over a compounded growth tracking sheet for you guys. Just another little tool that you'll get to have. And then I added this setting risk controls in DOS for the end of this because the last two boot camps that I did, when I ended with this one, every time at the end, because we talked about risk management, there were a lot of people that didn't understand how to set their risk controls in DOS. So I'm just going to run through it at the end. It might be just kind of like a rehashing overview for some of you, but we're gonna walk through it. Okay, so introduction to compounding. This is basically a concept of reinvesting your profits, right? So when you get a return, you put it back into your portfolio, into your trading. A lot of investors will do this, right? So they might make a certain percentage on their portfolio, take some of it out, reinvest some of it, compound the growth over time. It's leveraging your gains from successful trades to increase the size of your trading account. Now, what I love about compounding is that there are a lot of traders who don't know quite when to up their risk. And I'm sure some of you can probably relate to that. You're like, I'm at $25. When do I go to 50? When do I go to 100? I don't really know. Thank you, Stoyan. I appreciate that. Let's pause for a moment while I just look at this for a second. Apologies, you guys. I am on a swing position, and Stoyan has pointed out a level, and I'm just going to take a quick gander. Okay, I'm not concerned yet. We'll be okay. I've got a whole month on this swing, so we'll be okay. I'll check it when we're done. I appreciate that though. Okay, so basically this is going to give you guys kind of an idea of when do I up my risk? How do I do it safely? How do I do it so it doesn't like stress my brain out? And know when to go from 25 to 50, know when to go from 50 to 100. And it's about using the size of your account and leveraging it in the proper way. So when it's done correctly, it can lead to exponential growth. And I'm going to show you, last year I did just like a small account challenge, started with $1,000 and grew that. And some of you have already watched my presentation on that, so this is not news to you. But that's what compounding did for that account. And we'll talk through kind of exactly how that happened. So a couple things for maximizing compounding. One thing that I've found to be really beneficial is setting consistent profit targets. So the smaller base hits really matter here. And I know that a lot of people want to go for like those big home runs, and we all want them, right? But these consistent small base hits really, really maximize your returns if you're compounding your risk. And what that basically means is as your account slowly grows on these base hits, your risk per trade changes along the way. So the base hits, like a 2R, goes from being, $40 to $100 to $200 to $300, and it just grows over time. But the swinging for the fences, I find, they're good, but once you start to get into that mindset of swinging for the fences, it's hard to get out of the mindset of swinging for the fences. So if you're setting some consistent profit targets throughout the weeks and the days, these small little increments of growth can be really beneficial if you're compounding on a weekly basis. So sticking to risk management, accepting your stop outs and max loss days. I know that this is something that a lot of traders struggle with, but it is really important, because if you are only taking base hits, let's say, and you don't accept your stop outs and or your max loss days, the base hits are going to be really hard to turn this all around. Do I mean better to go out at 2R consistently, maybe 50% at 4R and leave runner, or what? Yeah. So basically having some part of your system that says, I'm going to take like 50% off at 2R, and that's always what I'm going to do, and then leave a small runner, or 80% at 2R and leave a small runner. If you want to, and part of it is like, this can change over time, because as you progress as a trader, you will have other reasons to get out of a trade. So your reasons to exit will start to kind of grow skill wise. But in the beginning, if you're trying to grow your account and you're also still learning, always trying to hold or swing for like those 8R moves can be difficult to do. So using the technicals and your reasons to get out of a position are important, but also finding some sort of balance between, I drop most of my position maybe at 2R and I let like a runner go, while at the runner I use to work on my technical analysis, because at least then you have those base hits that will grow the account. And then you can also still be working on, how do I maximize those base hits, or how do I make those base hits a little bit bigger? And you can use a smaller portion of your trade risk, like a 20% that's left on it or 10% that's left on it, to work on those skills while still maximizing your potential on compounding the growth of your account. Does that make sense? Okay, cool. So regular evaluation, assessing trade performance, analyzing strategies, reviewing your trade journals. This is all very important. This is something that you guys are all doing right now, but just keep this in mind that this is important. So, I just talked about your reasons to exit might change in the future, and this is all part of it. So we're talking about making consistent small base hits and then reevaluating our scenario to figure out how to then maybe maximize those base hits, which would cause greater compounding growth. Patience and discipline, stick to your trading plan, very, very important. Okay, so risk management and proper sizing. So I see a lot of traders go either really small or far too big for their account size. And people have a hard time somehow like being like in between those two. So let's just talk about like very simple, what does this look like depending on your account size? And just grow our risk slowly based on what we have in our account. So account size. Let's say that you have a $30,000 account, right? So, for those of you that are in the US, this is sometimes not a lot, because 25K is what gets you in the game. And then 5K after that is really what your account size is. So this puts us at an amount above PDT of $5,000. You'll remember I kind of discussed the same thing in the options class that I did at the beginning of this. So it's a little bit of a review here. So your account size is 30. So for those of you that are outside the US, your account size is just 30. But account size for those people in the US, if you're above PDT of $5,000, then your risk should really be only based off of this right here. Because if you get below 25K, that is a really terrible 25K writing, but you get the point. That is basically like you can't trade, right? So 5K is what your risk should be based off of, not $30,000. Unless again you're outside of the US, then you do whatever you want there. But this is what your risk should be based off of. And typically 1% per trade is what most traders will go for. Some traders, I know I've seen it happen with a lot of you guys, 1% per day. So your risk becomes really small, and that's fine too. So you might have 3 trades at 0.33% of your account, and that's also okay. But if we're talking 1% of the account, we're talking $50 here. Let's say your account size grows to 32,000, right? So we're talking compounded growth. What does this look like? Okay, now we're above PDT by $7,000. So risk per trade should be $70. So it's slowly growing as the account grows, right? But the thing about compounding is that it doesn't just jump. You're not going to just jump in one trade from $50 risk to $2,000 that day. I mean, you might. It might be like something crazy, like, NVIDIA drops $80 and you buy 0DTE short positions. But for the most part, this is going to take some time. So how do you go from risking this amount to risking this amount? Well, very small increments in between. And what's great about you guys is that a lot of you are using the fixed risk hotkey, and you can literally change this on a weekly basis. And you'd be changing it from like $50 to $51 to $52. And it's very slow, but it will add up. I promise you, trust me on this. So you don't need to wait until you get to like, if some of you are thinking, well, when I'm risking $50 and I finally grow my account to like 40 grand, then I'm going to up it to 100. Why? Why not just keep your risk based off of the size of your account and have it happen very, very slowly, right? Okay, so here is an example of how this works, right? So this trading was done using compounded growth. It was $1,000 account. I had some hiccups. I was getting used to options at the time. So it does look like chunky peanut butter a lot of the way up, but for the most part, it's moving in the right direction, right? And with this account, starting with 1K, 1% of 1K is literally $10, right? So in the beginning, we're risking $10 per trade. As this grows to 2K, we're risking $20 per trade. Still 1% of the account. And as that grows, the account just starts to kind of move like this, right? And it takes time. And of course, like I said, there's hiccups along the way, like any trading. But over the course of a few months, this grew from $1,000 to $8,000, right? So now this amount here, 8,600, 1% of that, we're looking at $86 risk. So now if I am risking 1R to say make 2R and I'm just going for those base hits, then on a base hit day, $160-ish would be my return. It's only going to take me a few days of a couple base hits to move this to 9 grand, to where then my position changes to $90, and then it's 180, and then it just keeps changing, right? And you change it as it goes down as well. So keep that in mind. So once you get up to something like this, if this drops, you adjust it. You always adjust based on your account size, and it's slow incremental growth. I relate this to an analogy of the frog in boiling water thing, which I think has been debunked by now. And also, I'm vegan, and I don't know why I use this as an example every time I teach this damn class. But this is very similar to like putting a frog in a pot of water, turning it on, and it just slowly dies. But your account slowly grows, right? And you don't feel it. And the point of this is to not put that psychological stress on yourself, because going from $20 risk immediately overnight to $50 risk is I have cuss words that I was going to use and I saved myself, but a mind blank, right? It's going to freaking blow your brain out. Like a lot of traders mess up when this happens because this is a $30 jump. I know that on like a daily basis in our average life, we probably pay that much for a freaking coffee. So it doesn't matter in like life outside of trading. But in trading, that amount can really mess you up. So the point of this is to do it very, very slowly to where you don't feel it. You are the frog in the water. You don't feel it, right? So that's the point of this. I don't want to feel it. I'm going from $10 to $11 to $12 to $13 to $14, and I'm slowly building over time. Yes, Kareem.
I'm sorry, Megan. So for me, when I do it, like I always like I do my risk, like if I have like my account example, like $10,000,
Hmm.
and so I make it 30/70. So I put 30% on the side, and I trade with the 70%, like kind of like 7,000. So that's why like I size up, like my size like around the 7,000. So if I made like $200 this day, so the second day, so I'm gonna do the calculation again, 70, 30, 70, and so this is gonna give me a room to size up. That's why I do it. If I lose, so I make like I go the calculation again, so I'm gonna size down. So I always like going like doesn't matter like what is it, if I make $1,000 the other day or like example like 200 or 300, just to give me a room. So I always do it like that. So
Yeah, I love
so
that, Kareem. Actually, I really like that you're using like a percentage of your account to base your risk off of, because I think that's a really also a good point to point out, something to point out, which is maybe some of you guys have like huge accounts, right? Some of you might in here, maybe let's say you have a $200,000 account or $500,000 account, and like if you took risk on this right now, it would probably be very stressful if you're just learning to trade. So using a percentage of your account, growing that with compounding, I think can also work really well. And like you're saying, Kareem, like adjusting it is important. Adjusting it is important, but know that you guys don't have to use 1% of your entire account. The point of this is pick a certain amount of your account, 1% or lower if you've got a really high account and that's just too much risk for you. And then compound that. So just slowly change that over time. Like Kareem is saying, he's using 70% of his account instead. So that's a good thing to point out. Okay. Stoyan, do I increase the risk daily or maybe the minimum weekly to make sure the week is green at least? So this is kind of like choose your own adventure at this point. I get this question a lot. Some traders do change it daily. I prefer weekly. So I change mine weekly when I'm working on this. And some will do it monthly and some will do it bi-weekly. I think monthly is too long. I think it's too far away because you might get that big jump that we're trying to avoid. So I do think weekly is somewhat somewhat of the sweet spot, or every other week. I think monthly is too long. Daily might be a little bit too short. I think we're like Goldilocks scenario in here. So yeah, just kind of like in the middle there. What is the software that creates those curves? This is TraderSync. So this is my trading journal platform. I can grab a link for you guys. I think is there still a discount code attached to this one? Let me see. So I know that you guys are using TraderView right now. This is TraderSync. This is what I use. It's a good one. Would you also reduce your risk if it's going downwards? Yes, absolutely. So if this starts to go down, adjust your risk. So we'll adjust it on a weekly basis. If you take a really big hit on a day, you might want to adjust it on a daily basis because that's going to be a little bit of a difficult scenario. But definitely make sure you're adjusting if it's going down. If this drops to like 5K, well, I don't want to be risking $86 if this drops to 5K. I want to be risking 50. I will say from experience, that is just to be completely transparent, that is one of the harder things with this, because you get used to trading this amount, and then when your account drops, to go back to a lower amount is difficult. So just kind of keep that in mind too. Just psychological things will always come into play as your account is growing and adjusting. So just be aware and be mindful. Rob.
Hey, good morning. So I just want to make a couple comments and ask a question. So I started doing this really successfully for the first half of the boot camp, and everything was great. And I went back to Kyle's like original the equalized risk per trade hotkey that he had, and he'd actually made one that would pull a percentage out of your account every day, so that you didn't have to go in and actually change the amount in the hotkey.
Oh, wow.
It's an awesome idea, because I'm a big systems person, and if you have to change the number every day or every week, you're putting yourself at risk of making an error, right, and putting in the wrong number and blowing things up. So it was very appealing to me to use his hotkeys, and I used them, but they've been really buggy, and so it's gotten weird stuff, and like a lot of the stops don't work. And for some reason, like I don't know, there was a whole bunch of talk about those keys back until about 5 years ago, and then they just kind of went the way of the dodo bird, and people just I don't know, they just didn't seem to work out, which sucks, right? And so I've been struggling with it is risky to have to change those numbers in your hotkey, right? Like again, I make I always type in the wrong numbers all the time, so I'd be trading like my whole account without realizing it, because I made the error. But then at the same time, like the compounded interest formula, the more often you compound it and compound it daily, it grows faster, right? So if you can change it every day, you should get the biggest bang for your buck, positive and negative, right? Compounding. Definitely. So I don't know. So do you know anything about like what happened to Kyle's keys? And then you already talked about kind of picking something between daily and monthly, and I don't know.
Yeah.
So
yeah, no. All good things to kind of touch on. That hotkey, I've never heard of it. But I love that it exists. I was about to ask you for it. It's unfortunately that it's buggy. If you want to, maybe Rob, email it to me. If you still have it, or if you have the video to it, that would be amazing.
Yeah, I've got the link to it. It's like a 40-page discussion. Mike hooked me up with it, and I'll send it to you. I'll put it on. I guess was it Telegraph? I guess too, because if anybody knows how to make it work, like it's like the greatest thing ever. It's just really complicated, and it destroyed my account with technical errors.
Okay. Yeah. Well, we definitely want to avoid that. So everybody that's listening, make sure that you do work on that one in Sim, since it seems to be buggy. I'll take a look at it and see if there's anything that I noticed with it. But yeah, so manual is probably going to be safer. Check your work 3 times, I guess, when you're entering numbers. But you do have a good point about, especially if you're using that kind of a hotkey, it will grow your account faster on a daily basis. But if you're doing it on a daily basis, but it can also go the other way as well. So I do think there is a sweet spot. I'm going to kind of stick to that, which is a weekly basis. I do think makes a lot of sense. So I would just suggest starting there for everybody. And if you do want to switch it to a daily basis, go for it. And if you prefer to go a little bit longer, go for it. It's again, let's choose your own adventure, however you want to compound. They'll all be similar in a sense, but how fast it goes or how slow it goes will change. And how big your leaps are will also change. Like I said, if you wait an entire month, you could be back in that situation of going from $20 to $60, and that might be too hard for you. So I do think that there is a sweet spot with maybe a weekly change and a weekly update. Okay, so we're going to get into this. So you guys get this lovely little tool from myself. I do need to give credit to a trader out there. He's not a part of our community. His name is Brian Lee. I've been following him for a while in his Discord room and on X. He is really, really good at risk management. And he put together a sheet similar to this. I kind of took from it and kind of just made it my own a little bit. This is in the download section on the PCT site. It's called compounded growth tracking sheet or compounded growth calculator. And what I'm gonna do is I'm gonna minimize this and we're going to pull it up and I'm gonna walk you through how it works. And then you guys can use this. Let me just get to these questions really quick before I do that. Do I advise getting consistently profitable at equities first before learning options? I do think it's safer. Options have many, many layers to them. So equities, the thing about equities, which makes them a little bit easier to just kind of use as your tool while you're understanding technical analysis, is that you only have to worry about the price. Like the price that the stock is at is really all you need to care about. When it comes to options, there is the price of the stock, but there's also how quickly it moves, how much volatility there is, and how much time till expiration, and a few other factors, which can adjust and change the price of the premium of your contracts. So while you're trying to learn technicals, if you're also focusing on, well, how much time is left in my contract, how much volatility is there, how fast is it going, blah, blah, blah. It's a lot more stuff to learn. So I do usually advise starting with equities and using equities as your vehicle to learn technical analysis. I do think that is a bit of a safer way. All right. Let's see. Okay, so let me just take a sip of water here and carry on. Alrighty, let me minimize this. And okay, so how this works is there is a starting capital in your account. So up here, you'll put whatever the capital is of your account. Okay. And in the beginning on the first sheet, that's going to be what your account size says right here as well. The account size will change. The next size or the next column, cell, is the amount you're above PDT. So this one, if I double click on this, is just this account size here minus $25,000. If you're out of the US and you are not worried about this, or if you're in a cash account and PDT doesn't matter, you can just make this, minus 0 and it will be 30,000 above PDT then in that case, or 30,000 total. This column here, or this cell here, is based 1% off of the amount that you are above PDT. So what we just discussed, right? So your risk, for those of you that are in the US, should not be based off of $30,000. It should be based off of what you are above PDT. So those of you that have a small account, let's say that you only have $10,000 in your account, it can be based off of that because you're not worried about PDT math calculation here. So this will take 1% of this right here, this cell right here. This has your max loss per day at 3R. And this tells you how many losses you have until you basically blow up your account. So this would get you to PDT if you lost 100 trades. So at that point, we consider once you're at 25,000 that you've basically kind of blown your account because you can't day trade anymore. If you were at, a $10,000 account, this would be a $5,000 account. This would be 100 losses to 0, right? So we consider 25,000 is like the 0 mark when you're above PDT. Now, you can change this. So if you prefer to have more opportunities to stay in the game here, you can change this. And how this gets changed is by changing your risk per trade. So if you're like $50 feels still too high for me right now, and I actually want more cushion before I would actually get to 0, basically, you can change this cell right here. So maybe you want it to be 0.05%, right? So we'll just do that. You can adjust it and it will adjust your risk per trade. Now you'll notice that over here in this section, this is being adjusted too. So this is what we're paying attention to on a weekly, daily, monthly basis to know how much risk we should be putting on. So we're just going to pay attention to this area over here. And this also has our 3R for our max loss. You can adjust that if you want. And 3R plus slippage. So what I typically advise is that your 3R max loss is your mental max loss, right? So when I hit negative $75 here, I'm going to be done for the day. My max loss that I set in DOS, which we'll go over how to set those risk controls, is going to be based off of slippage, 3R and slippage. So my max loss in DOS actually isn't going to be $75. It's going to be 3R plus a little bit of slippage. And this is calculated here with a percentage, I believe. Yeah, a little bit of a percentage here. And the reason why I have it like this is because sometimes you might be down, you know, a little bit extra on the first 2 trades just because of slippage, and your next trade never actually hit -1R, but DOS will stop you out because you would be at 75. And it is really frustrating when you actually didn't hit your 1R. It was 1R plus slippage. So I give a little cushion here so that, you know, DOS isn't going to shut you down while the trade is still trying to work itself out. So going back to this again, we'll go over here. I'm going to change this back to 1%. And you'll notice that that changes over here as well. So how this works is that on a daily basis, so today is Thursday, let's say that you had $50 risk. Today you made $100. In this cell here, I'm going to put $100, and you'll notice that the cell below it changes. I got something that happened there. The cell below it changes, and your R changed over here. So now your risk is $51. Okay, so again, you can change this on a daily basis if you want. So tomorrow, we're obviously, the market's not open, but you could go into the market, and tomorrow you could adjust your risk on a fixed risk hotkey to $51 instead of 50. Right, so very slow, frog in water, cooking. Okay, then let's say Friday you make $50. They'll change it. Maybe this day you make 25. If it's small, it's probably not going to do much to this R, right? So we still had a green day, but we don't need to change our R here. It's still $52. It was $52 on Friday. Today, let's say I make $15. It's still going to be $52. So you still don't change it, right? It's over the course of time that this starts to adjust itself. Okay, so it took 4 days of making a little bit of money to now this is $53. Small growth over time. The total will be, you know, over here at the edge. And at the end of the week, this is what I would start looking at. And this is when I start to adjust my risk per trade. So now it's $53. Change that in the Kyle's hotkey sheet or in your hotkey, and you're just slow growth over time. If you have a loss, it will adjust it for you. So let's say I lose, you know, $50 the next day, -50, it goes back down to 52. Let's say I knock it out of the park this day, we go up to 55. Knock it out of the park this day, not knock it out of the park that day, it goes back down, 51. So it will adjust with you as you go, and you would just adjust it in your platform as we're going. It will create a total, a monthly P&L at the end, and what you'll notice is down here it says monthly P&L. Let's pretend the whole month has passed by. It's $120. So our starting capital was $30,000. You'll notice that the account size changes to $30,120, right? So $30,000 and 120. That will transfer over to the next month. So when you go to month 2, your starting capital for month 2 changes to $30,000 and 120, right? So that now becomes your starting capital for month 2. So if I'm just going to put a bunch in here. So we'll just say like, I mean, it's $600, right? So the account size this month grows $600. It grows to almost $3,100 at that point. When I switch over to month 3, you'll notice that that becomes the starting capital for that month. So they're going to just kind of keep going. You have 12 months down here, and you can clear them out at the end of the year, start over. You can add more if you want. You will have to finagle some of the like equals to the last sheet type thing. So if you don't want to dealing with any of the columns and stuff, I would just go back to duplicate it and go back to month 1 when you start a new year. Any questions about this sheet? Yeah, the document has been updated. It is updated in the downloads. I had Mike do it last night. I adjusted it. For those of you that downloaded it previously, it actually had the months down here, like January 2024, February 2024. And these were all built out like the exact calendar of that month. And I found that during BCT, I kept having to like create all of these new ones, and this is just much easier. Yeah, Sarah, you can just you can keep that one. That one that was there before, I think, goes through May, and then you can move over to this one if you want to. It's all the same. The calculations are all the same. I just made it so it was more generic, so that you guys could actually just continue using this for months and months and months and months and months, forever, into infinity and beyond. You got it. Okay. Any questions here on this sheet? No questions. All right. Pretty straightforward. Like I said, it's just going to adjust with you. So you will just have it as your buddy here. Just go in and fix it so it's back to where we started. Okay. So now let's talk about risk controls in DOS, because I just mentioned, setting max loss with slippage, I think, is important. So your mental stop for max loss is going to be 150. Like if you have 3 back-to-back, R trades, losses, right? So -3R. And let's say you're around 150, maybe it's like 152. Your goal for your mental state and what you guys should be doing is to just stop, right? But your max loss with DOS, like I said, I add with a little bit of slippage, so that if something happens, I can be in my I can still take my 3 trades without the platform kind of screwing that up. So what we will do is we'll go back to slides. Okay, so this might be a refresher for some of you, but there's also something in here that I think a lot of people don't quite understand. So this is why I want to cover it. And it's because something terrible happened to me. And so I have PTSD, and I always want to make sure people get this right. So these are your risk controls in DOS. Now, right now they're controlled by PCT. When you have your own account, for those of you that, a lot of you do have your own account, you can set these on your own. The way to do that is to open your account window, and you're going to right click on the account that you want to set risk controls on. And you can do this on all of your accounts. So I do recommend doing it on your SIM account as well, because it's not a good idea to, when you have a bad trading day in your real account, to then go into SIM and just like hulk all over the place over there, because it's just going to build bad habits. So if you also have the same max loss set in your SIM account, it will instill those habits that, it's just the same across the board. So you're going to right click on the account you want to set your risk controls in. You're going to go down to open risk control page, and it's going to bring up this page over here. In this page over here, you'll see your username, and you'll see the account that you right clicked on. So if I was to right click on my options account, it would show the options account number in there. Now, a lot of people come into this risk control page and they immediately fill out max loss. That is not the one you want to fill out. And that is like what I want to highlight right now. It's not the one you want to fill out, because if you read this over here, max loss is your net P&L of realized plus commissions. Meaning that if you're realized, let's say that your max loss is 150, negative 150. And let's say that your realized is negative 149, but you have an open position. Your unrealized is now negative 1,000 because you moved your stop loss and everything's just going against you. This platform is not going to stop you out, because this is only realized. So if your realize is negative 149 and your max loss is negative $150, but you've got an unrealized position just going strong against you, you could be in that until forever, as long as it doesn't end up in the realized column. So once you close this and now you're down, $1 bajillion, 149,000. There we go. Once you're down that much, now you'll be locked out. But my God, you are far past your max loss. So I will tell you, I'm telling you this from experience, that my very first account that I blew up was because, obviously my fault, I cannot blame it on my platform, but I had max loss set and it was in the wrong place. So I had filled out this right here. And when I saw my account going against me, I had moved my stop, everything. It just kept going. And I said, well, that's my broker's fault. Why haven't they stopped me out yet? And I was like, it just kept going and going and going. And I was like, to the point where I was like, well, now my account's literally at 0. So like, I'm just, I guess, screw it. Like, I just it just kept going. It did sting. It was very upsetting. I didn't understand. I was like in the chat with them, like, why didn't you stop me out of this? I don't understand what happened. Like, I had this set, I had it set so that, because I know emotionally I couldn't do it myself. You guys didn't get me out. I was so mad at them. And then I realized the only person I can point fingers at is me, because I had this set wrong. So it's very confusing for most traders. We are not setting max loss here. Forget this one right there. What you want to set is total loss. Okay. So total loss is your maxed realized and unrealized loss. Okay. So now if you're down $149 and your max loss is $150, as soon as you hit one more dollar on your unrealized, it's going to close you out of your position. It's going to shut it down, right? So total loss is what you actually want to fill out here. And one last thing is you want to make sure that you have enable auto stop checkmarked. So the check mark in this is important because it's allowing your platform or DOS to actually close you out of the position. So total loss, enable auto stop, those are the most important components here. Now, one last thing is that, and maybe some of you don't know this, so this is always, I hate actually even telling you guys this, because now you have to actually fix this bad habit if it starts, but you can go in and change this whenever the hell you want to. Okay. So if you are negative $150 for the day, and you decide, screw it, I'm going to go in, I'm going to change this, you can go in and change it. Like, there's nothing stopping you. So yeah, I have done it too. So what you want to do is you're going to email DOS. Okay. So to Gens Unite. Exactly. So I know a lot of you have probably been there. You become like psychotic, like you're not even yourself anymore. So what you can do is you can email DOS and ask them to turn off your ability to edit this yourself. Okay. So basically they, on their back end, they turn it off so that you cannot change it. The only way for you to change it is to then email them. So you can email them, have them set it for you, and then have them turn it off. So you can say, I would like my total loss to be, $500. I would like enable auto stop. This is the account number. And this is my, account for DOS. So my actual account for my broker, and then my account for DOS. So you can just email them and have them do all of it, or you can set yours and then just ask them to turn it off on their side so that you don't adjust it later. And then when you need to change it, you have to send them an email, which that one extra step, I promise you, will save your life. Because I can't tell you how many times I have hit max loss, been like, God, and like started to write the email and then been like, no. It's just that one moment of pause that can really help you. And part of it is because I'm such a people pleaser that I'm like, I'm not going to bother them about this because I'm ridiculous. Like, they have other things to worry about, not the fact that like I couldn't stop myself. So that one extra level of security can be really, really important. So I highly recommend it, especially if you have zero self-control. It's very, very helpful. You've emailed them to turn it off and proceeded to be an idiot. Yeah, I mean, it's definitely a possibility. So, risk controls only work so well, but we can put as much into it as we possibly can, right? So fill this out. It's really important that you do that. If you find that you disobey this and you go in and change it, then, maybe give yourself a chance. Like if you're good, maybe some people don't struggle with that. I had a trading buddy that was like, I don't understand. Why can't you just stop at max loss? I'm like, leave me alone. Don't judge me. So I have to email DOS. I'm saying that right now. Like I have to. Yeah, they don't understand us. So, everybody's different. And obviously I'm laughing, but it's not fun when you lose money. So just keep that in mind. It sucks a lot emotionally, sucks on your capital. It's really not fun. So do this to prevent that. And if you need the extra layer of security, do that as well. Yeah, setting social media screen time limits on your phone. But I will tell you, mine always tells me there's 5 more minutes and I say, ignore for today. Let me back on Instagram. Okay, so this completes our session for today. I did say if we had a little bit of time, I'd run over and do technicals on Mara for a second. Does this mean I have to adjust this form every time I change my risk per trade due to compounding? So technically, yes, you would need to do that, which is also another reason why I suggest waiting 1 or 2 weeks, because then you're not emailing them every single day to change this for you. But if you yourself are okay changing this and you're able to stick to your max loss when the platform stops you without having to email them, then yes, you could go in here and change it on your own every single day as well. But yes, you will have to change that. Great question, Sarah. I forgot to mention that. Stoyan.
Megan, how much do you account for fees and slippage? What the number above the mental stop loss should we actually use for the total loss and the compound calculator?
So I believe on this, it is additional 0.1%. Oh, no. Okay. So it is 3.5% of whatever's in the 3R. Oops. Don't do that. So 3.5% of this for slippage. And honestly, like most of the time, you don't have that much slippage. But if you guys are trading things like BABA or something, you might, or like the really higher price stocks. That's why this is there. Ideally, you stop yourself at 3R, but in your total loss on DOS, I would say use a little bit of slippage so that it doesn't stop you out. And this will update. So as you change this, the slippage will change with this as well. Okay. If you keep a lower R despite the form showing higher R, does it matter? It doesn't. That's totally up to you. I will just say that if you do that for if you don't change it for 2 months while this is changing, and then you suddenly decide you're going to change it to what this R is, it defeats the purpose just because the jump would be quite big. Sometimes it is quite big. But you don't have to. And so I don't on a daily basis, right? If you have multiple green days during the week, this will change, but on a daily basis, I'm not changing it. I usually change it at the end of the week. I'll change it to whatever this is. So yeah, you can keep $50 risk throughout the week, even as it's changing each day. So if tomorrow it's 52, you don't have to change it to 52 tomorrow. You can use 50. If it's 60 at the end of the week, you can change it to go ahead and change it to 60. So it's completely up to you. Use it how you want to. There is no pressure to do exactly what this sheet says. Just know that the main part of this is to do it slowly so that your mental capacity and your mental kind of capital here doesn't get too affected by it. So just don't let it get too big and make the adjustment. Even if I will say I've had days where I've had really big returns and it has totally messed with this, made it jump too high. I will find a sweet spot in the middle. I won't always do what this tells me to do because I know I need some time to adjust. So keep that in mind too. You can still do what you want to do with it. All right, Kareem.
Hey Megan, does that when you do the stop loss, does make it with the percentage or just amount of money?
When you do a stop loss in DOS, so yeah, DOS only does, well, it could do a percentage if you had a hotkey. I don't have I do have a 10% hotkey for options. So yeah, you could do a percentage stop loss if that's something that you're interested in.
No, I'm talking about like when you set the maximum stop loss, you
Oh,
stop you out at daily. So if you do like a fixed amount, like a money, like 150, so now like you can size up or size down, so it's gonna be like that's how till until you can change it. So if you do like 104, 150 a day, and if like you make 200, so the R is gonna be, for example, like a $51. So the stop loss is not gonna adjust to that. Like they kick you out.
well, you'll have to go in and adjust it yourself, like not on the day. That's why I don't do it on a daily basis. I do it at like the end of the week.
Oh, okay.
Yeah, so you'll want to go in and adjust this at the end of the week so that if now you are risking like $200, this is like works with that and it's still 3R with slippage.
Okay.
Okay, cool. Any other questions on the compounded growth tracking sheet or this risk control stuff? And I realized there's something going on with this guy. So I am going to have to update that and come back to download this, you guys, at the end of the day. When I get off of this call, I'm going to update this because something happened with this cell right here. I'm going to update this. I'm going to double check the one on the website, and I'm going to probably have Mike upload a new one. I'll alert you guys in the Telegram group that it's good to go because I want to make sure that the cell is working for you. So not sure what happened there, but want to make sure that it works. So I'll alert you guys when it's up. Yep.
Yeah, Megan, I have two questions. If you change the max loss on the platform, is it like right away, or does it have like a certain lead time?
Yeah, it usually takes about, sometimes it happens faster than other times. Sometimes it takes like 5 to 10 minutes.
Oh, okay. So,
yeah, so they'll do it like right then.
Okay.
And then your max loss resets every day. So tomorrow it'll be gone. Like you'll still have the same settings, but you can trade again
until the next session.
Yeah. So if you get kicked out today, tomorrow you can trade again. It'll refresh itself.
Okay, great. Thank
you. Yep. Okay. Any other questions about this? Good to go. Okay. If something comes to mind, just let me know. I know Mike is going to have his group here in a second. So I do, like I said, I will go through Mara. So let's do a quick look at this since you guys were chatting about this before we started today. So here's the thing about Mara. A couple things on a technical basis on Mara. So as we are starting to create new highs, so Mara broke out recently, like this year. So we're starting to get out of this area here. Okay, so a lot of the times when things start to get out of an area like this, they will start to do that. It might come back down, not sure. But right now what the technicals say is that as we're trying to get out of here, the volume is going up with it. Now we did get a lot of selling pressure, but when we tried to push again, volume increased again. And this time when we have started to pull back, the volume on the pullback is starting to lighten up a little bit. So going over to the daily chart here is when we can really kind of start to see that. So over on the daily chart, during this pullback here, we can see that the volume is actually decreasing on the way down. And as it's starting to turn, it's starting to push. So not only is it starting to push on a turn, but what's happening here is we're actually breaking kind of like out of this pullback channel, I guess you would say, this area right here, right? So we're starting to turn, we're breaking this channel, and we have room to go until it comes back up and tests here. So we're basically playing the bottom kind of area of a range. And that's what I'm looking at, is what I was looking at. So I got in somewhere around this day here. Maybe it was this day here after this day happened. So I'm in a swing position on this. It consolidated at this lower area right here. So it's trying to push lower, but before we moved from this area, held it, right? So we've got a range going. It formed this nice little consolidation, and when it pushed out of it, we got an increase here on volume. So we've got demand showing here, right? So this takes us back to previous classes on demand, where we get a base and a push out of base. And now we just want to make sure the volume isn't too high on the pullbacks. And when it starts to come back up, that the volume is nice and elevated. And the stop on this is going to be below this demand candle right here. My target is up near the top side here. I have a kind of like a conservative target on it. But on the bigger picture, we're seeing that the volume when we push is becoming elevated. And so typically we're looking for some kind of structure break. So in this instance, a trend line break, and then a increase in volume as it starts to move in that direction. Now, something could happen and this could come all the way back down to the bottom of the range. You know, that's just part of trading, right? So we could get a bunch of selling and it could come all the way back down. And then at that point, you're just out of the position. No different than if you're on like a 5-minute chart to get out of the position there as well. Yeah, Dave.
Yes, Michael. Like, so you take this position with the options, right?
I did take this position with options, correct.
And how you like set the stop on that, and also like, okay, so what's you most likely took it at the strike price, like let's say like 22 or 23, somewhere around that. Like, so can you show like a little bit about it?
Yeah. So on this one, I took 2 different strike prices on this because I am working on a swing position or swing strategy right now. So I have 2 different strikes going because I'm playing with how they move in something that's longer term expiration. So I have a 20 and I also have a 25. So I did closer to at the money when I got into this, and a 25, which would be out of the money to trade with. The stop that I'm playing with for this type of a strategy is either a loss of the level or a 50% of the position. So whichever comes first. So if the position is down 50%, I would get out even if the level wasn't lost, because I can always reset when it starts to move away from it again. And then targets are, levels, liquidity zones, previous supply areas, and so on.
So there is like no hard stop, like, but just the mental stop. Like if position goes like 50% down, you are out of it.
Yeah, I'm just doing mental stops on these because they're not fluctuating too much because they're longer term dated contracts. You could put one on though. So like you could put a 50% stop in your options contract for sure.
Okay. And like, so you're taking like 30 days out of the in the range, right? Like, so at the end of the April, most likely?
Yeah, right now I'm doing 30 days out. I've played with a few different swings, and I'm starting to think maybe even 2 months out would be a little bit better, but right now 30 days out, yes.
Okay, thank you.
Yeah, you got it. Stoyan.
Megan, why are you taking one at the money and one out of the money? Is it just because you are testing the way they interact, or is it psychological? Because even yesterday, NA, our friend in the options tab, you know him, he actually took NVIDIA and he also took one at the money and one out of the money, and he was profitable on both. But I'm curious, why would you guys do that? Maybe I should think about it as well.
Yeah, so one reason is because the at the money or slightly in the money contracts are going to hold more intrinsic value. So if it doesn't push fast and get to the cheaper out of the money contracts, the one that's closer to at the money or slightly in the money is going to hold its value better. So I kind of use it as like right now, at least kind of a way to hedge the position. So if it does start to move towards the out of the monies, the one that's more at the money or in the money, the profit that you can start to kind of pull out of it will start to pay for the out of the money contracts. So I could drop like half of the position of the in the monies and pay for the out of the money contracts with that, and then basically be on a neutral no risk is on the trade at that point, continue to let the out of the monies progress, and the in the monies or at the monies also progress. So it's more of just a way of like, these ones will hold value a lot better than the out of the monies. And if it does start moving, the out of the monies will pick up really fast. So it's like a win-win. It is like I said, like I know NA was doing it yesterday. It's something that I'm playing with. I typically only do like at the money contracts. And because out of the money is a little bit cheaper, it's something that I've been adding into it, because as it starts to move in that direction, they do start to work out well. But it's kind of like hedgy, basically. Yes, another question, sir.
And does it get harder to manage risk when you're taking two option positions like this? Do you manage them separately? And also, do you have a particular way of deciding how to split your position between at the money and out of the money in these cases?
How do I decide to split the position, like
I mean,
profit-wise?
how much do you allocate to the in the money and how much to the out of the money? Or how do you manage risk for both?
Yeah, so the stops and how they're managed are both the same. So if during intraday trading, if they hit like -10 to -15%, I will just get out of the position. For swings, like I said, I'm doing 50%. And the amount allocated is a certain percentage of my account split between the two. So whereas I would take a certain percent of my account and use it just on like one position, that, let's say that it's like $100 risk, right? I would put that $100 risk into one position. If I'm doing in the money and out of the money, I will now split that. So I can do $50 risk on one position and $50 risk on the other position, so that I'm not like doubled up here, basically. Okay, cool. Okay, so we've covered compounded growth. We've covered risk controls. We did a quick little overview on the technical analysis of Mara. I know Mike is here and he's about to start his group D session, but because this is your last class, I just want to ask one more time, because it's your last chance with me here. Do you have any questions about anything that we've gone over so far in the entire course? Anything at all? I will allow 3 minutes. No, okay. All right. Well, it's been awesome coaching you guys. Thank you for attending this class. Thank you for, being a part of it and asking great questions. There will be a survey at the end of boot camp. If you hated this class, do not fill it out. But if you love this class, please do. Please leave your comments. And the people who run the show will decide what to do with me. So thank you guys so much. You know where to find me if you have questions going forward. I wish you all the best of luck on your trading journey. It has been an absolute pleasure. So have a great day, you guys. Have a great long weekend, and I will see you in the BBT chat room.